Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 17th of April, 2018. It's another great day today, hopefully for everyone. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market sentiment stance this morning with regards to risk is risk on. DAX leading the pack with 146 points, up 1.18%, followed by the Euro stocks up 0.95%, up 32 points. Then come the Dow, NASDAQ, and S&P and Russell following that. The S&P is up 16 points on a gap, up against almost a century figure at 2,700. It's been hovering here at 2680.50, the overnight high or the Globex high for a long time. A lot of compression up here. Point of control shifting to the high a day, expecting that to pop through pretty good. Overall, that's what we're looking for today. The items that could drive us around, we did have building permits and housing starts this morning. We're getting industrial production and capitalization in about 13 minutes, not very high tier numbers. But we do have Fed speakers throughout the day, 9:15 Eastern, 10 a.m., 11 a.m., 1:10 p.m., and 5:40 p.m. And we have IBM after the market. Pre-market, we did get Goldman Sachs earnings. They performed very well, as you would expect. $6.95 versus $5.67. The stock popped up and it came back. And I'm watching the XLF carefully. It's I believe currently it's around 19% of the S&P, something like that. So keep an eye on that. There's a lot of chatter coming from the Treasury Secretary this morning about the new tax system and the economy and so on. And as usual, keep your ears out for news. Let's take a look at what we expected yesterday versus what we got. So yesterday, very high confidence scenarios. The key scenario being the market opens. We were trading at 26.76 during the trader bite. The market opens, pulls back. Can't draw. There it is. Pulls back towards 2667 right here, this box. Pulls back towards 2667 and then starts to rally with the expected target of 2692 stock zone. What actually happened is exactly that on the turn, but it ended up getting stuck at the 2686 stock zone, 2687 being the high, and then it just pulled back. So let's look at what actually happened. Here it is. Let's scroll that up a little bit. Now, these stock zone have been moved, of course, to prepare for today, but we simply pushed into the 2667 area and did basically what was expected, looking for support, consolidation, and then eventually a push up into 2686. Again, I expected the continuation higher into the next stock zone, but it didn't quite make it. It just kept ping-ponging between zones at the top. Pay attention to this area right here today. Expecting this to be a pretty decent support area. It's below the overnight low, and it's at this point, it is way below where we are given the gap. So that's an area that's going to be marked with a future stock zone once today ends. Looking at what we've done, I mean, we opened up. Here's the overnight low along with the weekly high. Remember that I mentioned this in the Convergent Head Traders channel, that we're likely to break the the one-time framing down on the weekly. And once we do, the expectation is for the market to just push to 2,700. The ultimate target, by the way, is 2,720. And the close-to-close 1 sigma volatility measure is right on top of that at 2720.50. What that's basically saying is the big target up here, the big high volume node up here, is well within range of today's trading. And of course, we've already pushed to 26.98 right here. Market's trading 26.98.50, the overnight high currently. We've already pushed this high, and so it's a stone's throw away to get to 27.20. And so overall, the market played out scenario 1 almost perfectly yesterday, with a lot of seesaws back before it finally released to the upside. There was no continuation move. I read this as a flagging, the beginning of a flagging pattern here on this pole, and the expectation was for it to get an extension higher. Into the 2692, something like that. So that was the plan yesterday and how it worked out. They don't always work this beautifully, but when they do, it's always good. Here's what we've done since in the overnight. The overnight reopened right at the close, and we went pretty much sideways for much of the Asian session. And then we've been in this upward drift throughout the morning. So what we have here is a channel. Let me redraw that. Is a channel. Can't get a line. And very, very strong. And you'll see here that the point of control overnight is right on top of the overnight high. Some very strong consolidations. In fact, I posted an image of the heat map. Let's take a look at that for a moment. The heat map and how it's been trading, and I outline these almost perfect zippers that we have finally broken here. But if you look at how this has traded on the way up, the buy side is very active. I mean, we have a composite delta, or cumulative delta of plus 7,000 or 14,000 on the overnight session, Globex session, which is pretty strong. But you look at these zippers right here that have been formed before the break, and we keep doing this flag break, flag break. This has lasted a while here. Just good areas down below for supports as the market pulls back at some future date. These areas become important to me, at least for bounces or stock zones. So they're forming, we have pretty good volume formations in those areas. And that's going to get my attention at some future date once we pull back, or even today if we don't continue the move up. And so overall, as mentioned late last week and yesterday, the shorts need to really protect their position because it's really it's very, very likely. I think I started last Wednesday or Thursday. The days are a blur to me. To say look out for 2720, 2700 and 2720, and right here at 26.99 and a quarter. Right up against 2,700. So it just the way the market set up the bottom, the fact that we couldn't give up any ground below the microcomposite over a period of time. This is the composite here. This is the big picture. Each bar here represents. Let's switch this to RTH. RTH only. Each bar here represents the pit session, the entire pit session for the day, and overall, this area down here just could not hold prices down. You see where the high volume node going way back It's just not able. Every time it pokes below, it pushes up. Every time it pokes below, it pushes up. It's just not able to sustain those lower prices. And so what it's doing is it's setting up to close the gap that we've had since the 22nd of March and to start working its way back up to 2,800. That's how things are shaping up currently. So what we have is an impulse down in February, a very deep pullback, higher low, and we're in this corrective type pattern is what it seems like. Now, all of that gets blown in the water, blown out of the water with a news event. What are we looking for today? So today, let's make this bigger. That sounded really weird how I said that. So today we're opening right up in here. We're in an open auction out of range. We are in a gap zone. Gap zones are important in that during the day session, a gap zone is representing that a gap zone is representing that the market did not auction that period. It skipped through that period during the day session and never retested it. And so this is an open auction area, an unknown, and we're opening in the middle of it. So what we could see is what we're likely going to see is a very short, very tight pullback before the market gets impulsive and pushes right into the middle of this gap zone before it continues to the other side. So I expect a continuation of the buying. And we were pretty well wound up yesterday. We had a balanced profile that broke to the upside. It was actually kind of P-shape-ish that extended itself to the upside. Pretty good value area. Notice the value area extends from stock zone to stock zone. So I feel like we have the evidence is, not feel, the evidence is we have a pretty good base, and I'm expecting some portion of this gap zone to remain open today. The thing to note about yesterday is that the volume was relatively low. Okay, the volume was, if you look at the actual volume down here, which are the orange and white bars, versus the black lines, which are the 20-day. Those are the 20-day averages for that 15-minute bracket. This is a 15-minute chart. So this is what we expect for the first 15-minute bracket is in terms of volume, second, third, and so on. And you'll see that whenever there are spikes like this, it basically means that the actual volume was lower than the 20-day average for that particular block. So yesterday traded about 976,000 contracts, and which is almost 200,000 short of what we would consider to be the norm or the common. So again, this morning, open auction out of range, potential test down. I'm expecting an impulse at some point, a drive into the gap zone, consolidation into the gap zone, and a push to the other side. 2713 being the target. Overall. That's the primary scenario today. Okay. If we open and push up into the gap zone and find sellers in this untested area and start pushing lower, so we're taking out the opening swing low, taking out the opening swing low and through the open, and we start pushing our way through, there's very good support here, in my opinion, at 2687. I'm going to look for an opportunity to catch the initial bounce on the Virgin test back up into 2697. That gives me about 10 points of range on this trade before the market starts to consolidate into the afternoon session and resume its push higher. That's scenario 2. Now, if we see the same thing we did yesterday, where the moves up are just a grind and they require a lot of effort and they're happening on pretty poor volume, I'll show you the evidence of that. Here's a market that opened, pulled back, went back to the open, and was grinding sideways. And what we have is a delta that's just lagging by quite a bit on its way up. So on the turn up, it's just not able to find those buyers very easily. If that's the case, we don't have aggressive buyers aggressive enough to push hard. And if we see that this morning, the form it would most likely take is almost scenario 2 with the impulse down. And if we get an impulse down and we start to move into the prior day's range, then I'm looking for a bounce from 2684 right here in line with the value area and some overnight stuff. And then eventually, once we get into the range of the day, of the prior day, then eventually we're likely to push into 2680 quarter, which is the prior day's point of control. That's scenario number 3. Okay, that's a horrible looking 3. So that's how things are shaping up. I want to remind everybody at Convergent that we have a supplemental AMA. Since we didn't get through all the questions last Thursday, you should have received an invite for that. It's at 4:30 Eastern. Make sure you register and attend. Good luck, everybody. Take care.